All right, I had this question asked me, is all financing credit equal? And that's a really good question, right? But let's put it into context. Let's say that your main motivation is to quit your 9 to 5 because you want financial freedom. And you understand that there's many assets out there that you can potentially invest in or acquire to get you to that goal of financial freedom. But the asset that pretty much floats your boat, right, that you have an interest in, affinity towards, is rental properties, okay? And let's say you want to use financing to acquire rental properties. And let's say you have access to many different forms of financing. And so you're curious to know, are they created equal? Can I use all of them, or is there some that I should use or should stay away from? That's a really good question. All right, so I'm not trying to make a very long video and go into great detail, but I just want to give you some answers here, some solutions that are short and sweet, okay? I might run a little bit because I'm going off the top, but hopefully I'll be able to provide some good insight and help you along your journey towards financial freedom. All right, so and the reason why I came up with this video because I was consulting with one of our clients, and he asked a similar question to that. Now, in regard to all financing created equal, there's many types of financing out there, right? You might be able to, let's say, you might be able to get some sort of financing through your lending institution, right? You might have a relationship with Navy Fed, right? Navy Federal. And as a result of that relationship, they might extend you a line of credit or an installment loan, and it ends up on your personal credit. And let's say the terms are cheap, very attractive, very affordable. And you might get access to business funding, right? And the terms might be attractive, especially the introductory might be 0% introductory APR, and may look good. Or you might have a seller who says, hey, I'll be able to give you 50% seller financing. You might be thinking that's sweet. Okay, and this is what I'm gonna help share with you some soft, not in detail, but some soft general parameters to abide by. Number one, if you're doing a buy and hold strategy, in which you're buying a property, you're holding on it for the rental income, you do not want to acquire financing that goes on your personal credit, except a mortgage. Now, if it's a mortgage, that's different, that's fine. Because some people gotta get started off with residential mortgages, 1 to 4 units, that's fine. But what I'm referring to is if you have to get a line of credit or a personal credit card, a personal line of credit, a personal credit card, or a installment loan. Now, I always wanted to put the disclaimer as well. If you are ever entertaining using personal financing to acquire a rental property, not including a mortgage, but those things I just shared, personal line of credit, personal credit cards, an installment loan, you want to have a trustworthy mortgage broker and just share, hey, if I happen to use this loan or this line of credit, would this jam up my debt to income ratio in regard to qualify for a mortgage? Now, if you're a trustworthy advisor, your mortgage lender says, yes, it will mess you up, then you don't want to use it. So that's what I'm sharing with you now in this video. Pretty much 8 to 9 times out of 10, if you're trying to use those form of financing that I just outlined on your personal credit, it may get you jammed up, meaning you may not be able to get approved for mortgages. So even though you might get a sexy interest rate or you might get some really good terms, but when it comes to mortgages or trying to refinance later, you can get jammed up. Okay, another thing. So if you're happen to use other forms of financing, right, that don't necessarily show up on your personal credit, here's another parameter I want you to listen to as well. When you're doing this, you want to make sure that with that extra source of financing that doesn't end up on your personal credit, that it makes the deal work. Does it cash flow, right? If the seller says, oh, I'll give you 50% seller financing, but they want, who knows, a 12% interest rate, amortized, meaning the time it takes to pay off the loan in 5 years, and a balloon payment in 2, that payment can be extremely high. And you might be thinking it's sexy because the seller is willing to give you a huge mortgage, because a seller finance is a second mortgage, it's a junior mortgage, okay? And you might be thinking that's sexy because he's doing 50%. But you also got to think about, is it probably going to cash flow, for one, and for two, will my mortgage company allow me to accept seller financing for 50%? Oftentimes the answer is no, right? Seller financing is typically applicable to commercial properties, right? Commercial mortgages, multifamily, 5 units and up. and they require that the seller do no more than 10% of the purchase price. So for instance, if you're buying a property for $100,000 and it's 5 units, that's multifamily, most mortgage lenders, commercial mortgage lenders to be more specific, will be okay with the seller doing 10% or 10,000 in that scenario, not 50%. So that kind of goes back to what I stated earlier. You always want to run the financing you tend to use on a deal with a trusted advisor, a trusted mortgage broker, to see if it's okay. All right, but just to give you that parameter, if that financing doesn't cash flow or it doesn't complement well with mortgages, then you can't use it. And the third parameter I want you to share with you is this: you got to have a solid exit strategy. So if you're using some forms of financing, let's say it's not on your credit, and let's say it has some good terms, your mortgage lender is cool with it, and the property cash flows, but if it has like an introductory APR and expires later, you want to double check to see, okay, well, when it expires, do I have a good exit strategy to get out of this financing? Not just one, but 2 to 3 different exit strategies of how you can get out of that financing, okay? By the time that note matures, or by the time the introductory APR expires, and so forth. All right, so I just want to share with you that information. Now, if you're curious to know how you can use creative financing, because that's the way to do it. If you don't have tons of money in the bank and you want to be able to use leverage to be able to acquire additional rental units so you can become financially free, we have a free training for you. It shares with you all about multi-units, as well as being able to get creative financing to go along that journey of becoming financially free. So if that's you're interested, just check the links below to learn more. As always, guys, to your success, continue to earn passively, live passionately. Peace.